because they
Well,
expect
because
that
they
it's
want
going
to
to become
sell it
more
eventually,
desirable.
Michael. I mean, let's be honest. Most of the people who are, yes, sure, some people pass it on to their children, but like most of the people who are buying assets at some point want to sell the assets at a profit. So
let me say it a different way.
Okay.
People that use fiat currency as a store of value, there's a name for them. We call them poor.
So James, Michael Saylor continues this extremely aggressive kind of, this rinse and repeat cycle. He just announced recently, and of course, Bitcoin Twitter is losing their minds. March 11th, he announced completes a $800 million offering of convertible notes at, these crazy, kind of rates and stuff. And he just announced another one today, March 13th. So just continues to raise money, leverage his company to raise money to buy more Bitcoin. It's like this never ending cycle. So James, for our audience, could you kind of explain what he's doing, what mechanisms he's using, how he's leveraging his company in order to continue to raise more and more and more money to buy more Bitcoin? It's almost as if he's like printing money to buy Bitcoin, from my perspective.
You look, he's got a hoard of Bitcoin on his balance sheet. He's got an underlying company on top of it, but he's just leveraging the balance sheet in order to borrow money, using borrowing money and convertible bonds, and buying more Bitcoin. Those will convert at a much higher price, and so that allows him to borrow at a super low rate. Why? Because whoever owns those owns those bonds, they basically have a call option on the stock too, and so it's a great deal. And he's just continuing to go back to the well, and that's why you see a premium in the share price. If you take how much Bitcoin he owns and MicroStrategy, and you divide by the shares, and the price of the shares are, and you take down the other business down to a minimal value, the shares are trading at 60, 70, 80% premium, in the last few days to that underlying Bitcoin. And it's because the expectation he's going to continue to do this. And as Bitcoin goes up, he's going to benefit from it. It's a brilliant strategy. And I don't understand why some other companies don't do it, why they don't put some Bitcoin on their own balance sheets. It's absolutely maddening to think that you've got Apple and Microsoft with over $100 billion between them on their balance sheets, and they're just not there. If they are buying it, they're being extremely quiet about it. But now with the FASB ruling, where you can mark to market rather than having to take an impaired loss on it, that's a really big deal for these guys. So I think these are all doors that are opening now. The barriers are being toppled for institutional investors and for companies to add to their balance sheets, so in their treasury.
Yeah, and I kind of want to double back to what we were talking about, like right in kind of in the beginning of the podcast, and it kind of connects to what you're saying. And I remember I had the privilege of being able to speak to Saylor, and I asked him exactly what you just said, which is like, okay, you had your quarterly report. And I remember in the quarterly report, it was awesome because it was Saylor and it was a slideshow basically showing that MicroStrategy is just outperforming everything else. And one of the interns or producers tried to put that slide down, and Saylor's like, no, leave it up. And he just continues like for 30 minutes explaining why Bitcoin is this everything. And I told him, I was like, look, you've already proved it. You're vindicated, right? The MicroStrategy Bitcoin strategy is clearly working. Why is it taking so long for people to really switch? And this connects to what we were talking about earlier. And with your background, James, right? You were in the belly of the beast, so to speak. Why is it that it's taking so long for people to fully understand this new emerging asset, especially if you come from that legacy background?
Yeah, I mean, there's no incentive, right? You've done so well off the traditional finance, off the legacy fiat financial system. There's no incentive. The stocks are still going up. Yeah, we have inflation, but The companies are expanding. And these guys are taking down massive pay packages. So if you think about it this way, continue to do what they do in the system that they know, and they're very good at it. Financial engineering, buying back shares, setting themselves up with these pay packages that are tied to share, the stock performance. They can use they can use stock purchases and to buy back stock and then put them in the treasury and then hand those out to executives. And they just do that. This is the way they get paid, and they're incentivized to continue that way. Why would they change that model? If they go out and buy Bitcoin and put that on their balance sheet, that's something different. They're stepping outside the norm. They're taking a risk personally and professionally to do that, because if something happens where Bitcoin does drop in value by 70 or 80%, like it did, then they could be fired. Michael has he, and I talked to him about this long ago, is that he has the not the luxury, but the ability to do this without anybody questioning him, because he owns over 50% of the stock. These guys don't. Most of these CEOs own just a fraction of their company. They don't own 50%, like literally just a fraction. They sold out of most of it when they did their IPO, or they've sold out of most of their stock along the way. That's the problem, is that there's too much personal and professional risk, and there's too little incentive for them to do it. So,
okay. And I'm glad that you kind of broke it down based on your experience, and the fact that do you think that we'll ever reach a point where the incentive is there? I mean, like,
yeah.
How long, and I don't think it's a coincidence, by the way, that the CEO of Vanguard resigned. Okay. Especially with the whole BlackRock thing going on. And the amount of institutional inflows that are going into that ETF. But when do we, and I think there was a panel on this actually at Bitcoin Atlantis, when do we jump that chasm? Like, when do we go from early adopter to early majority? What needs to happen in order for us to make that jump, so to speak?
Well, we're experiencing it now with the ETFs. This has created an easy on-ramp for all these institutions that just couldn't buy before. Okay. So there's two things going on. Number one, the CEOs of these big companies, they could buy it and put it on their balance sheets. They have the ability to do that. They have to go through some headache to do it, but they could do it. Institutions like pension funds, endowments, they can't really just, and registered investment advisors, some family offices, they don't have the ability to go and just buy Bitcoin on its own. I've talked about this many, many times. And so it's not just professional risk, it's just huge barriers to entry for them. But now that we have the ETF, it makes it so simple, because instead of having to go through meetings and compliance and structures and operational issues and getting things approved and, things that take months and months and maybe years, now they can just say, hey, this is an asset that I want to own and put it on our balance or put it in our portfolios. And now we can just buy it through the same traders on the same exchanges with the same prime broker, settling it and custodying it with the same prime broker, and then pricing it just like any other stock and the market values. It makes it super simple. And so now all you're seeing is that highway's built, and it's easy for them to get on. All they have to do is build their own on-ramp. And that has to do with, if you're an institution, you have to have the meetings. You have to decide, do we want it in our portfolios? And then, how are we going to message? Like, what is the messaging around that to our investors, to the people that we need to answer to? And then if you're an RIA, you have to get approvals from your overriding company. You have to have the right verbiage, that you can have a sales pitch, or you can agree to allow them to buy this. And they have to check a box to understand that there's high risk because it's so volatile, whatever they want to say, just to CYA, cover your ass. And then that's it. They can, once they have that built and they've got the QSIP in their system, well, they can buy it for their investors just like any other stock. And we're seeing that happen every single day. Just a few more RIAs, maybe a couple institutions. They're just kind of coming on, and they're putting on their on-ramps. And that's why you're seeing every single day, $300-500 million is coming into net of the GBTC outflows is coming into these ETFs. And yesterday we had like $1 billion come in. And so, and then the function of the price is a whole nother matter, but that's what we're seeing happen. When does it go widespread? Good question. I believe that it happens slowly, and we're seeing it happen. And what is going on here is that everybody's looking around and going, "Hey, do you own that? So you're buying this?" And so, we need to put this in our portfolios. And so what we would do, and I've mentioned this before, is if there was something that we really thought we should own, you sense like this risk reward at my first glance looks like something I really want to own, just looking at whatever it is, the financials or the opportunity. What I'm going to do is I'm just going to buy a little bit, and then I'm going to dig in. And that's called legging into the trade. You just leg into the trade by buying 1% or 2%, and then you really dig in, or 0.5%, anything, just to make yourself do the work, because now it's on your portfolio and it's on every single day. You're going to see it there. So you got to say, oh, is this something I want to own or not? Do I want to add to it, or want to just take it off the books? Because it's staring at you every single day as you look at your sheets. So that's what you're seeing people do. And so they're just going to continue to dig in and continue to learn more and understand why it's different. And then suddenly you're going to see people put it in a lot of portfolios and have it a segregated kind of allocation to an asset across the board. And that's what I believe we're going to see.